It's a bit of a wrap for the week. It's where are we? It's nearly 4 o'clock server time, 2 o'clock in London, and US markets opening in about 40 minutes. So central bankers have really dominated the week this week. Obviously, Chair Powell's testimony to Congress has been key. Didn't really change much yesterday. It was the same statement, obviously, yesterday as had on Wednesday. But really, the takeaways were, well, a couple of things. One, his hindsight comments about inflation. It's easy to look at inflation in hindsight. But remember, they did stick to their transitory story about inflation for many, many months. Many market participants saying they were well behind the curve. And also his admittance that, recession is possible. We've got a panel going on at the moment, or it's been going on this afternoon with Bullard, one of the key hawks on the Fed, a member of the ECB, de Gaunt, and Mr. Lowe, the head of the RBA, all of them talking about rate hikes. De Gaunt's talking about potential negative growth, i.e. possible recession in 2023 in the euro area. Bullard was quite bullish about the US economy, talking about the fact that the businesses and consumers have been quite resilient. So we'll see how it all pans out, obviously, as we go into the second half of the year. Obviously, we're in the last week of the second quarter next week. And all eyes remain on inflation, remain on the rate hike path from principally the Fed, but all of the central banks as well seem to be going that way, except the yen, the Bank of Japan, and we got this massive rally in dollar yen up to 136.70, I think this week, wasn't it? 24-year high. It's cooled recently. Dollar's cooled in the last day or so, and stock markets have bounced a wee bit this week. So it looks like we have a positive week for stocks, having had 3 negative weeks. But on the weekly chart, certainly the outlook still looks very negative for stock markets. But anyway, it's Friday, so any things you want to talk about, please let me know. Stick it in this, stick it in the chat box. Amin, good afternoon. Hope you're well. And I can't read Arabic, unfortunately, but hi to you as well, my friend. So let's bring the charts up. So there we go. Let's bring me back as well. And on the way down, not up. There we go. Down a wee bit. So you can still hear me. Can't see me. Hope you can still hear me. So we've got. Let's bring up my charts as well. So this is the euro. This dollar index. Here we are. We've been as high as 105 earlier in the month. We've come down. Here's the daily chart. We've come down. We're at 104's key resistance area. Intraday, it's been very choppy the last few days. So we've been angling down really on an intraday basis. Here we are, 104.7 as the US market starts to open today. We're sort of sideways as far as the bond trend's concerned. We've had a bit of a nip here as we pin in and moving out. MACD slipping down here in the 1 hour chart. And RSI here on the 7-period RSI here ticking up. So let's see what that looks like. That's a euro. Forex is asking about what I think about the yen pairs and silver. Well, Forex live, I think hopefully, can you still hear me, guys? I'm guessing you can. So I seem to have disappeared from the. There we are. For some reason, there we are. That's a bit better. Hope you can see that. So let's just bring the yen pair. So obviously the key one, dollar yen. We've had this massive rally. 135 here. Let me zoom this up a bit. Last time, 136.70 was this high earlier in the week. 136.70. I put 60 on there. Went to 136.71 at one point. But we've rolled over in the last couple of days. But yes, you can see here on the daily chart that still looks very big. The 4 hour has come off that high. We're pivoting around 135 at the moment for 4-hour trades, and intraday traders 1 hour. The 1 hour trade, see we've come down. This is our Wednesday, Thursday, Friday. Our low today has been testing yesterday's low at 134.25. We bounced off that a wee bit, but it tends to roll over. The long term way forward forex lines is really it's obviously driven by the fundamentals, and that remains that the Bank of Japan remain very competitive. Politicians, potentially the Prime Minister and the Finance Minister this week, have got a bit twitchy about the weakness of the yen, but there's no policy change expected. So we've got this massive differential between what's going on in Japan and the rest of the world. So we've got huge yield differentials going on. So we've got this massive carry trade, and hence the yen has weakened very, very significantly over the last weeks or so. And there's no real let up on that. You can see on the hour today, the last couple of days, it's come down a wee bit. So that trade will continue to run. I would, where's my chart? I would argue my chart here. Sorry, so dollar yen, I say 134.25 has been our support this week. But if you look at the daily chart, that's still very, very big, isn't it? The 20-day average sits at actually it's been tested, hasn't it? 132.95. So call it 133. So that's your big support, 133. So there's still 100 odd pips to the downside before that support is tested. But really, again, if you zoom that up, you can see that's a big support area as well there. Those two daily lows there from last week, 132. So 130. Just get that in there, yeah. So 133 is the 20-day moving average. 132 is that end of day close we had last week. So still remains big. Obviously, we're at 24-year highs here, and as I said earlier in the week, I think some of 1998, when we were in the middle of a major credit crisis, major Asian credit crisis, we went to 147, and then if we go back to spring of 1990, a key recession area, dollar yen went all the way to 160. So 136 seems very, very, very high at the moment. Indeed, it is a 24-year high, but there's it's not unprecedented. It's not all-time highs, as some people have been saying this week. Dollar yen remains very much to the upside. We were asking about and silver. Interestingly, silver. I was looking at silver. Looked like it was going to go long the day before yesterday. Looked like it bounced off a key area, and it did the exact opposite yesterday. So silver's been a very interesting chart this week. I don't look at it all the time, to be honest, forex lines, but very interesting move. It's the commodity, the weakness in the commodity sector, the move down in copper, the move down in silver has been sort of not coordinate, but it's been coincident with this bit of a bounce we've had in the stock market. So if I just let me just explain that. So here on the this is the futures on the S&P 500 on an hourly basis. We've got the daily basis. You can see what a bounce we've had. We've had this week. We're saying anything over 3,800, potentially bringing a short squeeze for equities, but we're 3,900 is key. But if we take this up to the weekly chart, you can see we've had a good week here from 3 down weeks. But if the 200 weekly takes us down here to 3,500, 3,700 sort of targets to the downside on a weekly basis, you can see that's a significant roll off, obviously, for 2022, having had this great big, multi-year rally going back all the way to 2008, and obviously the big bounce we've had from the pandemic. So it still looks weak to me on a end of week basis. Daily basis, there's a bit of a rally going on here. We could get to 3,925 area. Here on the daily basis. Sorry, I'll come to your silver comment in a minute. I just want to explain the equity situation. So 3,930 is where the 20-day moving average. So it really needs to get over that to then take it to 4,000 and possibly 4,100 up here to the upside. But I say this is rallied quite a bit this week anyway. We're going to have an up week, but traditionally the last week of June can be quite a week for equity markets. May not obviously have that this year, and then July can be okay to start the month, but going further into the summer, it still looks relatively weak to me with this rate hike cycle in place. The more this becomes certain, the more we will get some people buying, some investors buying down at these levels. I.e., the rate hike cycle becomes certain, so the valuations become a bit more palatable, and so we get buyers back in. Obviously, the next thing that happens then, looking into the medium term, the middle of July, we start seeing the second quarter earnings coming in, and that's when the real numbers start coming in, and we'll see how bad the second quarter has actually been going forward. It may not be as bad as many expect, and therefore we could get this this rally back to this 4,175 level, which has been resistance at the end of April, beginning of June, and then we could move back up to mid 4,000 levels for the S&P. But we shall see as we go forward. As I say, the weekly still looks pretty weak to me. We've had rallies as the markets move down anyway before. So anyway, your comment was about silver, wasn't it? And I've talked about the stock market. That's why you've seen this move in the silver, and it's been I've got silver here. I'm sure I've got silver. Yeah, yes, I have. Here we are. Silver. It's not. It's in black. It's not in white. Sorry. So this is the normal crossing. It's our crossing here strategy. So on a daily basis, it looked like we were. Is that up to date? Yeah. Looked like we were. Showed some signs earlier in the week of a bit of a bounce up, but we had a big move yesterday, and the test is sort of just below where we are at the moment, $20.60 than this May low. So we're pushing towards the downside. It can't get over its 20. So I'll zoom that up. You can see it's a bit like the gold market. It's a bit nondescript, but it really doesn't want to break over. It's 21 EMA here. So we've had a move up here, a sort of weak move up into the end of May. Didn't follow through at the beginning of June, and then it's sort of just tampered with it, tempted to break it. It hasn't. So that's rolling. That looks weak to me, and that continues to find resistance at the 20-day moving average. So that would be short, really, for me. Resistance, stop loss will be there at 21.57. The ATR on a daily basis is about 55 cents on the silver market. So that's still moving lower. It depends when you're taking that. And if this breaks below here, multiple daily ATRs will take you down $1.5 easily from here into this 19 level. So the weekly basis, you can see, obviously the candle's not complete for this week, but you can see what a weak week it's had, and we're back to this, nearly year lows here. This is the week of beginning of July. So we had a big rally up here at the end of July last 2 years ago, 2020, as the pandemic was gripping. So we're down here. So this looks particularly weak to me, the silver market. So a break of this 2060, 2050 level, and there's lots of fresh air underneath that particular one, my friend. So that's my view on silver forex lines, my friend. David, good afternoon. Sion, good afternoon. Hang on a minute, I've missed somebody out, I think. No, I haven't. Forex lines. I did. There's lots of questions coming. Oh my word! Sorry, I've missed you. Can you hear me? Simbra's asked about CAD. Imran's also asking about dollar CAD, and then we'll get to your question about oil, Imran. So Simran, you're both asking about dollar CAD. Dollar CAD. When I looked at it this morning, we'd looked at 129, 128.50 were key intraday basis. This is the weekly chart for dollar CAD. You can see it's sort of angling to the upside. Let's bring it down to the daily. There we go. So this is the weekly. So you can see the weekly. I hope you can see the weekly 20 period moving average, the Bollinger Band here, gradually moving up. So we're making new highs, we're making new lows, so that's trending higher on the weekly basis. Let's just stick some little. So they don't show, do they? That's the trouble with swapping coloured charts all the time. Your trend lines need to change colour. So the blue, that's our top trend line going on for our weekly basis. Now, our low down here has been sort of ramping up there, so we're getting a bit of a wedgie shape here from June on a daily basis, so it could be sort of compressing, but 129 has been key. So if we go, that's the weekly, sorry, I'm talking about back to 2021. So the daily, we bounced at the top of this channel here, so 130, so 129.75 at the moment. Again, a strong week last week as we bounced off the bottom of the channel at 125.96. So maybe forming a double top as well there, but that still looks relatively strong. This big rally up from down here. So where are we? Got some chart. Let's just put 129 in. That red line there is 129. So just bear with me a second. And we were down. It's a hell of a run, isn't it? There's that 129, 125.50. So yeah, that's been a big big rally we've had. So we need to hold 129 if this breakout. This is going to take us forward, and then we need to break this weekly line up here. So we've had a sell-off, consolidation, rally, sell-off back to this 125.50 level, and then another big rally, another big leg up. So we need to break this level. Obviously, a lot of this is dependent on the oil market as far as the support of the commodity currencies. But MACD is looking relatively positive. So that's still looking dollar bid against the CAD here. A bit of congestion last week and this week above this 129 level. So holding 129 key. The 20-day moving average here you see in the Bollinger Band, as the Bollinger Bands are widening, takes us down under 128 to 127.86. So that's support. That's daily support. That's our support this week, 129. And resist, and obviously we're at 129.70. Obviously, again, the psychological 130 is the next level up. But if we just look at the intraday highs we got in May, took us to 130.70. So that's which we tested last week as well in June. So that looks like a next level to the upside if we can hold and break 130. So we'll trade at 129.70 at the moment. A break of 130 would perhaps bring in a test of 130.70 as we look to the end of the month for dollar CAD Zimbra. Okay, intraday. If you want intraday, let's do the intraday as well. 4 hour. Yeah, it's consolidating up here above the 129 level. 1 hour. Way above that. There's the 129 here today. Yesterday we've been angling higher this week, haven't we? Again, our high yesterday we 30. We couldn't hold. Put 130 level in there. 130 is around about there. They're 130.08, so we couldn't. There we are. 130. So we couldn't hold it yesterday. Came down, so that's obviously clear resistance today. Then we've slipped further. We're under the under half. The under half of the Bollinger Band today. So today, as the US markets open in 25 minutes, we need to be breaking 129.81 to start moving up to test at 130 level again, possibly. And yesterday's high took us to 130.17. It's not looking great. It's looking to dip, if anything. MACD's down. RSI is 7, so bouncing off a wee bit. But yeah, that's secure resistance 129.80. So that was dollar CAD. Imran, we got dollar CAD. Imran's also asking about oil. oil market. This is the weekly chart. Really, what can I say? The bid is still in. We're way over $100 a barrel still. The daily chart has rolled over quite significantly this week. There's that 123 we got to last week, up there, 123.60, and it's about a big sell-off last week. Zoom up. So this was Friday, Thursday, Wednesday, Tuesday, Monday. Big sell-off on last Friday. Definitely, you'd argue that's definitely rolled. 102 has been our support area. 102, 102 as a round number for the price of. Sorry, it's using new charts at the moment. 102. There we are. It's been our support this week, but that breaks. That then brings in obviously 100, which is just below here. Another big round psychological number, 100. So that's added to the sort of the upbeat we've had with equity markets as well. So tight supply, remember, has kept the oil market underpinned and pushed up to the higher. A worry about inflation and a worry about global recession has obviously punctured the oil market. There's also chatter yesterday. Excuse that. There's let's see. I think it sounds like a police car and an ambulance going past. I'll stop for a minute when it passes. That there may be some progress in the Iranian nuclear deal as well. That would bring in more supply if that was part of the deal. So maybe that's in the news there as well. But 102 is the key support for US oil. 100 is big psychological number, and then below that, if we zoom in, you can see we rallied up quite nicely. We could sort of break out and could get quite choppy all the way down to 95 here, which takes us through. This is March and stuff, so it's not out of the question. It went up quite steadily from the spike to that 123 on the stuff, the invasion of Ukraine. So 95 would call if the $100 level broke next week as we're going forward. As you can see, RSI here on the 7 is a bit oversold here on the daily. But the MACD has slipped under the histograms have slipped under the zero line, and the signal line is moving down. As you can see, we're at the top of 123. So yeah, the big move was obviously last Friday. So pressure remains to the downside, but very obviously a very politically charged market, Imran, as I'm sure you're aware. Good afternoon to Babola. Good day, sir. Please, what do you think of gold? Let's look at some more gold questions. I'm sure there'll be lots of gold questions in here. No, it's just for you're the first one. So let's have a look at gold. Gold really is not trending for me. We had a volatile day yesterday. With lots of lines in here. I don't know. That's a bit, let's take all these lines off. Clean up a bit. There we go. But I know all those lines are on there. Let's bring that. So there we go. Let's bring it up. So $2,000 we got to in March, and everyone's looking rosy, and then we've just lumped down, sliding sideways. So we got support. Let me bring in 1800. It's around 1800. So 1800 here. We've been above it for all of May and all of June, but that's a big line in the sand. Currently, next support for me sits around about 1815. That's 1815, round about there. And we can't break over 1870. 1870, that's our big breakthrough. So literally we've been pivoting through the moving average. See how flat the 20-period moving average is there through the 1850 level. So really, it's not trending. It's biased to the downside, if anything. We're in the other half of the, strictly looking at bond funds here, they're sort of moving over. 1, 2, 3, 4, 5, 6 days. All right, 1, 2, 3, 4, 5. Yeah, close to 5 days this week under the 20-day moving average at 1850. We can't close over it. In fact, that's 1845, but 1850 a wee bit higher there. So yeah, it's moving down, but we need to break this low we punctured last week, which was just above the key 1800 level. 1800. Big round numbers here. Just bear with me a second. There's 1800. So 1815 I had as support, didn't I? I said on my other charts that one's looking a bit tighter there, about 1808, but it's biased to the downside. So it's getting pulled in both directions. Gold. It's obviously, as inflation goes up, it's a hedge against inflation. Always has been. As interest rates go up, people, it's as yields go up, it's a non-yielding asset, so it gets pressured to the downside. But it's a safe haven asset, so there should be demand for it as equities and riskier assets go down, so it should move up. So there's this pull and push on the gold market, and it can't find a direction. It may, when it breaks though, if I go zoom this in, when it breaks out of this channel, it could be quite a significant break. We could be back to 2000, we could be back to 1500 easily, either direction. At the moment, it's sort of edging lower, isn't it? Because again, just eyeballing this daily chart, you can see we've been under the 20 period moving average, the lower half of the Bollinger Band. We've been above it, haven't we? But for the end of May, most of June, we've just been going sideways, haven't we? So it's looking to break. We go up to the higher time frame. What's the weekly chart frame? Well, here, on a weekly chart for 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months, we've been in the under half of the Bollinger Band. Interestingly, the Bollinger Band on the weekly pushed up because of this big rally we had as the war was predicted. Well, was anticipating and again we'd had a big long period of consolidation. We rallied up on the war, but then it sort of faded really quickly, didn't it? So there's no real demand there. So again, we're in this channel really. It's not doing great things, but it's still biased to the downside, I would argue. Gold going forward, we need some clear direction and some clear buys and demand, and that's not happening currently in the things that are going on in the world, and that's borne out in the charts. I tell myself, my friend. So look, those key levels: 1850, 1875, 1810, 1800 is big support levels as we go forward. Forex lines, cable. Do you think cable and euro would go up anytime soon? It's not those currencies improving; it's the dollar weakening. Euro, had to go at 106 yesterday. Sterling hasn't. The political news in UK is not great for the Prime Minister. He's away for 8 days apparently, Johnson, and he's at the Commonwealth Conference in Rwanda of all places. Where they want to send what they call illegal immigrants across the channel. But that's ran into legal obstacles in the UK and in the EU. Not in the EU, but the European Court of Human Rights. Anyway, it's another long story. But so sterling is sort of held up on that side. Euro, you could argue, could get a bid simply because the ECB have to do something, the pressure to have to do something. But here again, on the daily, you can see it's not a great deal of action. We've been moving up relatively this week from this test of 104. So clearly here, this is 104 here, the big blue line. Clearly some buyers down here a couple of weeks ago, last week, and here in the middle of May, there was buys at 104. So clearly buys at 104. Psychologically, if I zoom this up, psychologically, see this next blue line here is 105. That's the more psychological number because it's a 5 and zeros. We've had support this week at this level, but this week, as you can see, we got to 106 and then rejected that. So we're in a sort of 100 pip range, the euro, between 106 and 105. But again, another one that's biased to the downside because we're in the under half of the Bollinger Band. We've moved down from above it to below it. Classic Bollinger Band move. We moved out of the Bollinger Band. We've moved, tested outside of the Bollinger Band down here at 104. Now we rallied 200 pips to test the midline, and then we've rejected that thus far. So again, we've rejected 106 and we're moving back down. So a break of 105 could take us to 104. 105 holding takes us back to test 106 and a break into the upper half of the Bollinger Band, and then that takes us to 107 and above that with 108. So sorry, talking big round numbers, but they're the levels that euros is moving in at the moment with where the central banks are doing with regard to control. As far as the intraday traders are concerned, for the 4-hour trader here, as you can see, sort of biased to the upside. His highs have got higher, but again, really can't break 106 on the 4-hour time. See that very clearly there on that 4-hour chart, can't you? So it's up, down, up, down, up, down. So impulse, whatever you want to call it, where it's sort of egging up, but we're fading again as we come into the end of the week for 4-hour traders. Intraday, a bit more action there. Strong rally in the 1 hour into 106, stalled down, big break here. When was that? Yesterday morning, 23rd. No, we moved down, but again, didn't want to move below 105, and it sort of moved into 105, where we are now, basically, to close yesterday, 105.20. And we got halfway between 105 and 106, 55 today. So again, a little bit biased to the upside, but we're back under the 20-hour moving average now, as US markets cash markets are about to open. So big round numbers key: 106, 105. The channel we're in for euro traders. Forex lines, and as far as cable's concerned, it's less clear. The trend remains down. We're pressured, so again we've got buyers down here at 120. We rallied off 120, got over 122, and that's where we are sit now, over what the key 122. But in the longer term, it's not great. The lots of chatter. All countries are suffering from high inflation, 40-year highs in the UK, 40-year highs in the US. But the UK has got the added complication of the Brexit situation, which is weighing economically, and also the political issue about trying to get out of the Northern Ireland Protocol, which could potentially trigger a full-on trade war with the EU. I can't see that happening, but the potential is there for it. So sterling, looking forward, still remains pressured, but clearly buys at 120. This week, anyway, we've had buys at 122, but again, another one that doesn't want to move any higher in this second to last week of June. See how the last week of June figures, but again, not a great deal of action on sterling there. If there's some big political upheaval, the Prime Minister does resign. He says he's not going to, but lots of pressure. He's away from the country, so it's not a great setup. But is there political pressure within his own party to take some action? We shall see. But resistance initially here, the 20-day moving average, the midline, the Bollinger Bands at 123.75. I've got a big thick blue line there at 125.85, just below the big psychological 125. So 125 is absolutely key. I say this all the time. Historically, 125 for cable, a key level historically, as is 120, as we saw the buys here. So the big 500 pip range for cable, but bias to the downside, I'd say, on that setup. Forex lines. Good afternoon, David. Good afternoon, David, another David, and good afternoon, Henry. Hello, everyone. Hope you're all well. Marine, what are your thoughts on the Nasdaq 100? Well, it's, as I say, as with the Dow and the S&P, we've had quite a bounce this week. Where's the Nasdaq gone? There we go, weekly. But as you can see on the weekly chart, that's still short, isn't it, my friend? Interestingly, the Nasdaq led us higher, but it's also led us lower. So right from the first week of January, here on the weekly time frame, we've been in the under half of the Bollinger Band. Big rollover, and just keep adding to your shorts as we go to test it, and that's big move down. Retrace bear market earlier this year in the Nasdaq. We've had 1 week up. We've had 3 weeks down, like I was saying before, the S&P 500, and we've got that has been broken now. Interesting how that candle may finish tonight. Above last week's open, but so there's still clearly, if I zoom that up for you, you can see a gap from 2 weeks ago to the open last week. So that gap gets closed. That would be interesting today. But MACD remains down. So the closing was 11,240 last Friday. We're significantly above that, 600 points above that at the moment. 11,800 we're over at the moment. So yeah, it's an up week, but is it just another bear market rally? Dead cat bounce. My view is it is, but it doesn't really matter what I think. It's what the charts are telling me. As an end of week trader, that's still short. As an end of day trader, it's still short. However, it looks like there may be some upside rally. So you're going against the higher time frame trend, against the week trend, against the monthly trend, but there's some upside potentially. Resistance on the daily sits at 11,988, so it's a smidge shy of 12,000. So 12,000 on the Nasdaq 100 here, this particular chart here I've got in front of me, is key. So there might have been some buying into the end of the month. Maybe that gap needs to be closed. There you go. That's the gap I was talking about. Where we are now, 11,800 to 11,000. Sorry, to 12,000. So that 200 points would close that gap we had last week. Would be, so the short squeeze might get squeezed out. We might rally higher, but we'd need to break certainly the 20-day moving average, and then you'd be looking to try and test the May highs, which are all the way up there at 12,895. So again, a smidge shy of 13,000 for you Nasdaq traders. So actually it's 12,900, so 10 points short of 13,000. So that's what you'd be looking forward to the upside if you've been buying down here. But to confirm a rally up, you need to break the 20-day moving average, and as we did here at the end of May, it petered out after a while, didn't it, and then went lower. So the lows have still got lower. The highs haven't got higher yet, but have we got some bargain basement investors down here in the Nasdaq? Remember, tech stocks very highly valued, very vulnerable to rising interest rates. That's why we've had a move down for 2022. I was looking the other day. The worst 6 months start for the stock markets for many years, going back to 1928, 1932. Some years for COVID. So it's been a very weak start, and all of that will get, the numbers will get rallied up next week when we come to the end of the month, we come to the end of the quarter, we come to the end of the half year. So this may be, people thinking we're going to move position themselves for the second half of the year, and get, well, this is as bad as it's going to get. But technically and fundamentally, it still looks quite weak. These are, people jumping in a wee bit early, I would argue. So weekly, monthly remains weak. The daily, we've had a nice rally this week. We've broken the 3-week down leg, but we need to break those levels if we're going to go higher. On the stock markets and the fundamentals, and the sentiment is not sort of showing that, as I say, for equity markets in particular. The second half of July becomes key as the second quarter earnings season kicks in as well. So that's the sort of time frame you want to be looking at. Mabim. As far as the intraday Mabim on the Nasdaq, it's had a positive week or so. So the 4-hour remains bid here, which is broken out again there. So we're up and over the Bollinger Bands. It's moving up quite nicely. There's your sort of target level on the daily, that 12,000 level. And the 1 hour, a bit more aggressive in its move. But again, there's 12,000 first. Today, we'd want to get to the top of the Bollinger Band again, as we did earlier today at 11,900, then 12,000. But whether that's going to happen for the rest of the day, we shall see. Stock markets have opened. I don't know what we're doing at the moment. No, still a couple of minutes to go. But that's where we sit with the Nasdaq intraday, Mabim. Okay, where am I? Let's have a look on maybe here. Euro going up would still take a long time. It would indeed, can it? As I said before, the Euro got the daily. You can see it's sort of, again, it's channel. 107 needs to be breached and held. The euro is going to move up against the dollar, and we're currently trading at 105.35. So we're 150 pips away from a breakout to the upside, buys to the downside. I would comply. I would agree with you there, my friend Marvin. What about the Canadian dollar against the Japanese yen, CAD yen? Well, there we go. Yen is weak because of the fundamental policy of the Bank of Japan to remain accommodative. Bank of Canada, like the other major central banks, have started their. In fact, they were the first to start to cut QE and raise interest rates. So CAD yen again. It's benefited to the upside. If I've got CAD yen here, I'm trying to have. Just bear with me a sec. CAD Swiss. CAD yen. So CAD yen. Let's just bring this back. Sorry, so black. This is the crossing EMA strategy here. CAD yen today has sort of picked up. Let's start doing this the other way around. So they're doing it. So on we're not going to see the lines because I can't see the red line. So 103.60 has been key support yesterday, or was as far as we fell yesterday. There we are, and we bounced off that today. So intraday, that's had a big up candle here at whatever time that was, and that's moving up. And again, but a big down day yesterday. And a big down day on Wednesday, haven't had rallied up on Tuesday. So again, some nice trending moves there. That has been under its 20-hour moving average all of yesterday, most of today. It got out, got back in, got out there, got short again, and stopped you out. So it's gone long finally now. But if we go up the time frames, the 4 hour, again, nice trade, some big moves here. There's that 103 at the lower time frames we found here on the 4 hour. 4 hour yet to break back over the 5 and the 9 here haven't crossed yet. The 21's up here. So 4 hour traders, we want to break 104.30 if this is going to take you long into the weekend. And on a daily basis, what's going on a daily basis? It's long and then it's short. So we're right on daily support here at 103.60. So this could break lower, has it? Having moved up quite significantly. Let's have a quick fib. I'm not sure the fib thing's going to work. Oh, it might do. There we go. That's our levels. So this 103.6 we got on the 1 hour chart is a key Fibonacci level on this rally up here from mid-May to mid-June when we went to 107. Plus 107. So since then we've rescinded again. So we went to with the 61.8 again. It's sort of magic, isn't it? Actually, sometimes it does make me smile. So we found support at 61, and then it's bounced off. So that's the last sort of leg, if you like. If you just going to override each other, so that's the last leg within there. And so we're sort of clustering around that 50% of that leg now here. And there's that 38.2 overriding each other there. So we're at a key level now. See how I did that? It's not magic. It's what it is. So this 103.60 level is absolutely fundamental. I didn't realise that when we looked at that 1 hour chart. So we're in big support area because that's the 21 EMA there at 103.60. So that's support. That holds here on a daily basis. We could look to move back up. If it breaks, we're going to test that level there, and then test this 101.55 level from. In fact, where's that? That's a bit drawn that incorrectly. I may have got that a bit. That's a bit too low. That should be around about 105.75, not 105.55. But that's where we are with CAD yen, my friend Marvin. So yeah, there we go. David, what do you say about Euro Swiss? Look, Euro Swiss. It's one of the not the least exciting as far as movements, but daily clearly some resistance through there at 105, so 104.90, just shy of 105 here for May and also for June. It's moved down very significantly on the announcements from Jordan. That the Swiss has got 2 weeks, so Euro Swiss big move down last week on Jordan's comments, and we've broken out of that 104.25 support we had for May, and we're plummeting new low. So if you look to the left, where's the next low? Well, the support here takes all the way up to March, takes it to 1,009. So the big around parity number, which takes it down here somewhere else. There we are, just that red line there is parity, 110. There we are, 100 is sort of pulling Euro Swiss back toward it at the moment. Certainly has done for the last, since we had John's comments last week. Swiss National Bank, remember, surprised by 75 basis points. The big surprise of Central Bank Week last week. 75 basis points from the Bank of Switzerland, and we've been weaker ever since. So parity looks like it's on the cards. By the looks of things, and that's still trending lower, I would say. And just bear that in mind if you're trading it intraday. David, my friend, how can I tell the strength of a support or resistance level? Phrase, that's a great question. Well, see how many times has it been touched? Okay, how many times has it been tested or broken? So support and resistance. The higher the time frame, think about this, the higher the time frame, the more the significant the level. Okay, I just proved the opposite of that with that demonstration of the 103.6 level, because we found it in the hourly chart, didn't we? But then we went up the time frames and we found it was a key 20-day moving average level. So that's why it's finding support on the 1 hour time frame. So always go up to the higher time frames to find your support. So let me demonstrate what I mean by that here on this particular chart. So this is the daily time frame. So you just look at it as we did when we opened the chart up. Where are the key resistance levels? Well, where's the high? Keep it simple. Where's the high? So the high on this chart here for the last, this is June, May, April, back to March, February, a bit too far back, but you can see clearly there's some sort of resistance up here, and there it is. It's 104.90. So, you just take that up to 105 itself, and it's just above that. So, round numbers can be key support areas just because of the psychologicalness of them. Okay, so round numbers can be key. So, when you see round numbers, but also, see where it's at. And again, as a support, we saw that this was a key level, wasn't it? It happened to be 104.44, which is just shy of 104. Sorry, 102. 15 on a 4, I'm talking about 1.02550. So again, another sort of round number area. Is that support level? So that's really the don't get too attached to them, but don't make them too